Going over IRS Form 8820, Orphan Drug Credit. This is a fairly straightforward tax form that covers, it's one of the general business credits, the Orphan Drug Credit. Specifically, this is for taxpayers who invest in research and development or clinical testing of what we would consider to be orphan drugs. So there are a couple of definitions that we need to know here. Qualified clinical testing expenses. So the orphan drug credit is 25% of qualified clinical testing expenses that were either paid or accrued during the tax year. So if you incurred those taxes or those expenses, then you can claim them. You can take a credit of up to 25% for those qualified clinical testing expenses that were paid or incurred during the tax year. So in general, those expenses would be how much you paid under Internal Revenues Code Section 41. They do not include expenses that were already funded by a grant, a contract, or a governmental entity or some other person. Clinical testing generally means any human clinical testing that meets the following four conditions. One, the testing is carried out under an exemption for a drug being tested for a rare disease or a condition under Section 505I of the Federal Food, Drug, and Cosmetic Act. Two, the testing occurs after the date that the drug is designated under the Cosmetic Act, Section 526, and before the date on which an application is approved. Three, the testing is conducted by or for the taxpayer to whom the designation applies. And then four, the testing relates to the use of the drug for a rare condition or disease for which it was designated. So the definition of a rare disease or condition is that it affects either fewer than 200,000 people per year in the United States, or it might affect more people, but there is no reasonable expectation of being able to recover the cost of developing this drug and making it available. So all of those are further defined under the Federal Food, Drug, and Cosmetic Act. So this simply is the form that you can use to claim the drug credit of up to 25% of qualified clinical testing expenses. This credit is not available for clinical testing conducted outside the United States unless there is an insufficient testing population in the states, and if the testing is conducted by a U.S. person or another person not related to the taxpayer. And then there is coordination with the research credit, so you cannot use the same expenses to figure out the orphan drug credit that you use to calculate the credit for increasing research activities. However, any of those expenses that may qualify for either one must be included in the base period research expenses when trying to figure out the credit for increasing research activities in a later tax year. So if that applies to your situation, then see the form instructions for more detail. So we're going to go through this form. Our hero John Doe operates his S Corporation, Doe Enterprises, and we're simply going to fill out this form. We're going to enter $40,000 of qualified clinical testing expenses that were paid during the tax year. And then question 2A asks whether you are electing the reduced credit under Internal Revenue Code Section 280C. So further detail is contained on why you might do that in Treasury Regulations Section 1.28-1. If you are a taxpayer but you're not a partnership, S corporation, estate, and a trust, if your only source of the tax credit is a pass-through from a pass-through entity that will report on line 3, you don't need to complete this form. So what we're going to do is we're going to select no, that we're not electing the reduced credit. We're going to multiply this line by 25%, so that gives us $10,000 credit. We also would have to attach a statement to this form that basically lists the deductions or capitalized expenses that we might have reduced if we needed to reduce our otherwise allowable deduction for clinical testing expenses by the amount of the credit. So you can take a deduction, you can take a credit, but you can't take both a deduction and a credit for the same expenses. So you would have to go back to the tax form that you're reporting your deductions on and reduce deductions by the amount of the tax credit. So if there are capitalized expenses as part of the testing, then you would need to take additional steps to make sure that you're reducing the chargeable to your capital account if there's an excess. So just be careful about making sure that you're not trying to claim a deduction and a tax credit for the same expenses. So in line 2B, if you have any credits for employer differential pay wage payments, we're going to enter the portion in 2B that's attributable to wages that were also used to figure out that credit. In this case, there are none, but if there were, we would have to subtract that part of the tax credit, the differential wage payments credit. So let's just imagine that we actually had $2,000 in differential wage payments. We could only take a credit for up to $8,000. Okay, so that's how that works. And then in line 3, if you have an orphan drug credit that was passed down from another pass-through entity, then you would enter that here. And again, if you don't have a credit for any clinical testing expenses that you paid during the tax year, then if your only credit is this credit on line 3, you can report that directly on IRS form 3800. Let's just say that we had $5,000. Then we would add line 2C and line 3. We give $15,000. If you're not an estate or a trust, then you'll stop on line 4. Partnerships and S corporations would report this amount on Schedule K, so that's what Doe Enterprises would do. If you're an individual, you can report this directly on IRS Form 3800. Now, the additional step that estates and trusts have to do is allocate any amount of this tax credit to the beneficiaries. So let's just imagine that we had to push out $10,000 of this tax credit to the beneficiaries. Then that would leave $5,000 to be able to report on IRS Form 3800 as a general business credit. So that's how that would work for estates and trusts. Now, this is part 1 of the current year tax credit. If we go to part 2, this is actual drug information. So we could just, enter the name of the drug or compound. And then there should be the designation application number as well as the date that the drug was designated. So let's just say, and then so For every drug that you have that meets this criteria, then you would list every single drug. On this page 2, there are up to 26 different lines. If you need additional lines, you can attach additional page 2s or part 2 forms to make sure that you cover all the orphan drugs. That's all we have for this article, or this video. It's a fairly straightforward form to complete as part of the General Business Credit series. If you want more detailed information about how to complete the form, you can go to our article, which is on teachmepersonalfinance.com. Type in IRS Form 8820 in the search bar, and you should see our article appear. If you like our articles, please subscribe to our newsletter. And if you like our videos, please subscribe to our YouTube channel. If you have any questions or comments, please post them in the comments section. And thank you very much and have a great day.